Hi everyone, thank you for joining us once again for another economic data release. Today the topic of our discussion is UK CPI year on year. So let me just start off with commenting on the previous data. Let me just see a couple of the charts that we have. Okay, so if we start to comment on the previous data, we should mention that UK inflation remained below the Bank of England's 2% inflation target in March, reaching 1.6%, the lowest reading since October 2009. This reading was preceded by 1.7% in February. This was the sixth consecutive month of low inflation, narrowing the gap between wage growth and the rise in prices, contributing to business stability. UK inflation is expected to increase to 1.7%. We should also mention that we have a very interesting editor and analyst at capitalspeculator.com, James Picerno, who we comment very often on the webinars, and he also mentioned that the fact that Bank of England Governor Mark Carney emphasized last week that interest rates are likely to remain low relative to historic levels for some time. In a press conference after the release of the bank's quarterly inflation report, he explained that the exact timing of the first adjustment of the bank rate will be a product of the evolution of the economy. Let's see what some of the forecasts are as well, and the summary of the forecast. Like overall, 34 economists were polled by Bloomberg. Here are 10 of them of what they had to say. Now, in addition to already mentioned fundamental aspects, we should also highlight that one reason why Bank of England is in no rush to change monetary policy and begin tightening the recent decline in inflation. Today's update on consumer prices isn't likely to conflict with that trend. In every inflation release since last October, the annual pace of headline consumer inflation has eased, falling to 1.6% for the year through March. In fact, the ongoing slide, although modest, is starting to raise concerns that the disinflationary trend may be a prosecutor to deflation. In any case, inflation in Britain is conspicuously non-threatening these days from the central bank's perspective. Well, at least it's mostly non-threatening. Housing prices are rising sharply, and the bull market in the residential property market has coincided with a conspicuous rise in mortgage-related debt. The surge in borrowing has caught the attention of Carney, who told Sky News last week, "We'd be concerned if there wasn't a rapid increase in high loan-to-value mortgages across the banks. We've seen that creeping up, and it's something we're watching closely." But for now, Carney is reluctant to use Bank of England's policy rate to slow the housing market. That's a luxury he still can afford as long as CPI trend remains soft. And finally, before I give the words to Alex to comment on the technical side of things, let's have a look what Dukascopy community members and forecasters have to say. Here we go. And overall, 40% of those who participated in the Dukascopy fundamental contest believe that the upcoming impact of UK CPI year on year will be bullish on Great Britain pound USD. That is 62% of the voters, while 38 or 25 believe it will be bearish. Here are some of the comments that you can have a look, and that supported I provided the view. And in the meantime, Alex, I'm very excited to have you join us on the whiteboard in order to have a look at the upcoming data release.
Well, thank you, Nita. So once again, today we are discussing UK CPI figures, and even though the consensus forecast stands for 1.7%, we see that Aslan Hamad believes that data will surprise markets to the upside, and we'll see strong and expected figure some closer to the threshold imposed by the central bank. I mean, the 2% inflation target. And actually, that will be a rather tricky situation today, as last month, for the first time in 6 years, inflation has finally met wage growth, and that's obviously a great sign for the UK economy, as faster wage growth will help to diminish the remaining slack in the economy. Hence, the Bank of England will start raising interest rates faster than expected. In contrast, higher inflation will obviously also mean that the economy is developing and it's on the right track. So actually, as you can see from this chart, inflation figures usually provides massive spikes in trading in volatility, and we see that the range in volatility was from 21 up to 47 pips, even though the data came in line with analysts' forecast last month. So still, even in case of disappointment, we'll see some major moves. However, keeping in mind the recent appreciation of the pair, I guess that will be really worth paying attention to the recent volatility, and also keeping in mind last week's inflation report. I guess there's a rather high possibility that today's reaction will be slightly modest. And so regarding the trading strategy itself, as always, it includes the entrance point at the market price, which currently stands at 168.40, just slightly above the recommended stop loss. As you can see, we have placed it around daily resistance at 168.38, so not a really risky trading strategy at all. Regarding the take profit, it's placed around 168.61, just 20 pips from the current market price, and the level is represented by daily resistance, and that's a potential take profit. Regarding the market sentiment, currency index, and pending orders, here we see that everything speaks in favor of pair's depreciation. However, there has been a slight change in the sentiment actually during the last several days, and if I recall correctly, both the single currency and the sterling were sold in around 60-65% of all cases, while now we see that attitudes towards the sterling has changed, and now traders are selling the UK currency only in 56% of all cases across the board. Meanwhile, pending orders in 50 and 100 pips range are still placed to sell the pair, meaning that traders believe that the downward trend that started on May 6th will continue. And as you can see, in 50 and 100 pips range, 52 and 60, almost 61% of pending orders respectively are placed to sell the pair. And actually, if we'll have a look at the market sentiment provided by the Saxo Bank and Daily Fix, here we'll see actually the similar situation, as vast majority of traders believe that the pair will depreciate. Actually, regarding the technicals, here we see rather mixed situation. So I guess that would not be a very reliable source of information. Moreover, MACD indicator is also mixed and does not give a clear buy or sell signal. So therefore, I guess we should simply wait for the news. And currently, we see that the pair is trading around the recommended stop loss. So just less than a minute left before the news release. Actually, the pair has just bounced from the recommended stop loss and currently trading at 168.46 in the anticipation of the data. So, yeah, we see more and more volatility, and currently the pair is approaching the recommended take profit. So, just a couple of pips left, to be more precise, just 7 pips left till the level is breached. And as you can see, the next recommended take profit should be placed around daily resistance of 168.78. So I will just also draw a line right here, so it will be more visible. So just recently, the pair has penetrated the take profit. So yeah, rather optimistic figures, and actually the data came as Aslam Hamad predicted at 1.8%, so slightly better than expected both on the monthly and annual basis. And on the monthly basis, inflation picked up 0.4%. So obviously that's a positive sign for the sterling, which has received a strong bullish bias from the fundamentals. And if we'll switch to the 4-hour chart, first of all, you see that during the last several weeks the pair has been depreciating, and that was a result of lean Bank of England meetings, as well as lack of action from the central bank during the inflation report. However, after reaching weekly support at 167.36, the pair bounced back, and has already gained more than 129 pips, so pretty impressive actually. And in case daily resistance is breached, which is currently located at 168.61, then the pair will aim towards another day resistance, and only afterwards it will clear the way for May 12 high and weekly resistance around 169.07. Yeah, I guess that will be pretty much regarding the news release. So yeah, I'm giving the floor back to Gita.
Thank you very much, Alex. Thanks, Assam, for your comments. Very precise forecast indeed. Good figures for UK. So thank you and for joining us and participating. I hope you are able to take part in tomorrow's economic data release. And I will tell you the time just in a second. That will be also at 8:15, and we'll be discussing UK retail sales. So be sure to tune in tomorrow. In the meantime, have a nice day and take care. Goodbye.